Hello, my dear friends. My heartiest welcome to the stressed of fraternity who subscribed CMA Inter subscription classes. By the by, I am Satyaraju Kolluru. Here I am dealing total two papers. One is paper 6, financial accounting, and the other one is paper 10. In fact, part of paper 10, which is corporate accounting. And the corporate auditing is going to deal by another faculty. Sir, before proceeding with the content related to corporate accounting, let me give a quick synopsis related to lectures and the materials, how we are going to follow. Before proceeding with such all other issues, these entire lectures are completely based on 2022 new syllabus. 2022 new syllabus. So that means these lectures are going to applicable from May 2023 examination onwards. Sir, then related to material, which material we should need to follow, sir? So totally we are releasing three materials. One is main material, and the other one is solution material, and the final one is classroom notes. Sir, main material is this one. So if you observe the chapter names, so totally I split into 20 chapters, something like that. So where some of the chapters are already done and some of the chapters are in work in progress, or it might be completed within a week as well. So this is the main material. You will get it through the material corner in our Shrestha application. Next, coming to solution material. Sir, solution material is not yet released, but the entire solutions we are going to deal in the classroom discussion itself. The same solutions you are also getting our classroom notebook. But even though classroom notes is available, still we are going to provide the solution material as well for the benefit of the entire student community. So the classroom notes, how you will get in generally. So the entire classes we are going to teach through OneNote. So once the chapter got completed, it was converted as PDF, and the entire PDF is going to consolidate, and it also uploaded into the material corner of our application. Sir, apart from these three resources, shall we follow any other resources? Just believe me, guys, for developing this material, lot of efforts taken care by me. So this material is ultimate for your exams. So without fail, if you listen all the lectures, as well as if you follow the materials which given by us, it is more than enough to crack the examination with flying colors. Is it okay, guys? Fine. Next, sir, coming to syllabus. Coming to syllabus, what are all different chapters covered by the corporate accounting? You know, the name consisting itself as a corporate accounting. Corporate accounting means here we are going to deal only things related to company. So we are not dealing anything related to sole proprietorship, partnership form of organizations, or non-trading concerns. So such all other stuff we already discussed in the paper 6, which is so called as financial accounting. Here our focus is only towards corporate accounts, that is company related books of accounts. Sir, the entire syllabus, if you check as per the blueprint given by the CMA Institute, the entire syllabus is going to divide into 5 big chapters or 5 big units. I can call it as units as well. Now, let me put all such 5 big units into my OneNote quickly. That is syllabus. So even though I put the chapter 1 as a heading, first I am providing the intro to the syllabus of our paper, which is corporate accounting, right? So the entire syllabus, they are going to divide it into 5 different chapters. One is issue of shares and debentures. That is topic number 1. And topic number 2, preparation of financial statements as per schedule 3, division 1. This is chapter number 2. Chapter number 3 is cash flow statement. Chapter number 4 is industry specific organizations. Preparation of financial statements of industry specific organizations like banking companies, insurance companies, electricity companies. And the final one is introduction to Ind AS, that is simply Indian accounting standards, out of which they covered Ind AS 1, Ind AS 2, Ind AS 10, Ind AS 19, Ind AS 33, the final one is Ind AS 38. Okay, totally 6 Ind AS covered there. So each specific chapter, they also allocated the marks. Issue of shares and debentures, they allocated a 10% of the marks. If you check here, 10%. For all 10%. Preparation of financial statements is 10%. Cash flow statement is also 10%. Banking company, insurance, electricity companies, 10%. For Ind AS, also they allocated 10% of the marks. Sir, here I am not dealing any individual specific chapter. Sir, what it tells, what are the objective of the specific chapter, what are the different contents covered in that specific chapter. So that and all I am not going to deal here. Just what is the overall syllabus, just I put it into my OneNote. That's it. Okay. Now, this is your syllabus. And before checking with the objectives of each and every specific chapter and what are the contents covered in that specific chapter, first, let me put the pattern of your paper, your examination paper, because based upon the pattern of your examination only, our entire lectures style and the way of preparation of your style depends. Am I right? That is how I'm going to take the lectures as well as how you are going to prepare for your exams. Both are completely depending upon the examination pattern. So that's why first let me explain examination pattern. That is exam pattern simply. Exam pattern. Sir, you know this paper consists of 2 sub-papers, that is which one is related to corporate accounting and the other one is corporate audit. Here I am not discussing anything related to corporate audit. I'm only going to discuss things related to corporate accounting only. Actually, the paper consists of net 50 marks. Net 50 marks. Even though the net marks are 50, but the paper is asking for totally 48 plus 14, which is 62 marks. Actually, the paper is asking for 62 marks. Out of 62 marks, you should need to attempt for 50 marks. That is the paper style actually. This is number of marks for which the paper, in generally in the paper for how many marks they're asking, which is 62 marks. And the net marks you should need to answer is 50 marks. Fine. Now, how they are going to design this entire paper, sir? So which is question number 1, which is objective question. Objective. This objective question, is asked for totally 14 marks. And one more thing, guys, this is a compulsory question. This is a compulsory question. In this, again, they are going to divide into 3 subparts. That is, one is related to MCQs, and the other one is related to maybe match the following, or true or false. Okay, or it may be fill in the blanks. So like that, they might jumble each and everything, but it is not in descriptive mode. It is compulsory in objective mode. MCQs, filling the blanks, match the following, true or false, like that it will be there. So in generally MCQs, they are asking for 6 marks, and match the following or filling the blanks, they are giving for 4 marks, and true or false, they're asking for 4 marks. That is 6 plus 4, 10, 10 plus 4, 14 marks. Guys, one more thing here, I want to tell you. This question paper pattern is based on the old examination pattern. I mean the examinations which were held in the year 2018, because after the post-COVID or during the COVID situations, the exams were conducted in online mode. So the paper pattern was a little bit different. Hopefully the same pattern is also going to be continued for the future May 2023 and further exams. The same pattern means that is the old pattern. Okay, the same pattern here I'm discussing. But if any changes are there, then definitely I'll intimate to you through a separate video lecture. No worries. Till the date of notification made by the same institute, please all of you presume that the same pattern is going to be continued for all your future exams. Next, from question number 2 to question number 5, total consists of 4 questions. Total consists of 4 questions. So total, it contains 4 questions, out of which you should need to answer any of 3 questions. Am I right? So total, they are given, these are 4 questions, out of which you should need to answer for 3 questions. Now, question number 2 to question number 4. Each question consists of 12 marks. Question number 2 to question number 4 is a problematic part. So pure problematic questions they are going to test. So each question carries 12 marks. Sir, each question consists sub questions. If there are 2 sub questions are there, 6, 6. If there are 3 sub questions are there, they might ask for 4, or they might give like this as well. That is, one is 5, another one is 5, 2. So like this, they will arrange according to their order. There is no specific formats or the blueprint given by the CMA Institute for designing such sub questions. Next, for the last question, which is question number 5, which is completely theory question. So again, in that question, we have totally 4 questions, 4 theory questions they might ask. Out of such 4 questions, you should need to give answers for 3 questions. Again, one more choice you can take. Out of the total 4 questions, you should need to write 3 questions. And in the last question, which is theory question, out of the 4 questions, you can write answers for any 3 questions. This is the pattern actually followed for your old exams by CMA Institute. Hopefully the same pattern is going to applicable for your future exams as well. Okay, hope you understand things related to examination pattern. That means after completion of each and every chapter, we are also focused on MCQs, filling the blanks, and match the following are true or false whenever applicable. Is it okay, guys? Apart from the problematic issues. And we are also give our focus on theory issues. We are not specifically deal any theory questions, but at the time of explaining the concept itself, I will tell you the important questions they might ask, or at the end of each and every chapter, I'll put such specific questions, which type of questions they might ask related to the theory questions. So total, the way of designing each and every chapter is concept, problems, and the objective type of questions, that is like MCQ or match the following or filling the blanks or true or false, and the theory questions as well. Hope you understand. Now, sir, coming to each and every specific chapter, what are the contents covered in each and every specific chapter, sir? In case of issue of shares and debentures, actually, they covered various chapters. Even though they put it under one chapter, this chapter consists of various sub-chapters. That is like issue and what it is. Just a moment. Yeah, issue and forfeiture. Issue and forfeiture of shares. Okay. Bonus and right shares. Bonus and right shares. Buyback of equity shares. Buyback of equity shares. Redemption of preference shares. Redemption of preference shares. Okay. Redemption of debentures. Issue and redemption of debentures. Issue and redemption of debentures. Okay. Then employee stock option plan, comma, employee stock purchase plan, comma, sweat equity shares. Okay. Underwriting of securities. Underwriting of securities. So those many sub-chapters actually clubbed into the chapter number 1. Chapter number 1 is very big chapter actually. Still, even though it is a big chapter, it consists of only 10% of the overall syllabus. So content-wise, it contains more than 10% syllabus, but marks-wise, the coverage is only 10%. But the concepts which you are going to learn in chapter 1, which create a base for the other chapters. That's why we can't take it as choice, this chapter. So a lot of time we are going to spend to complete all these different chapters. That is issue and forfeiture of the shares, bonus and right shares. This is subchapter number 1, subchapter number 2, subchapter number 3 is buyback of equity shares. Subchapter number 4 is redemption of preference shares. Subchapter number 5 is issue and redemption of debentures. 6 is ESOP, employee stock option plan, employee stock purchase plan, sweat equity shares. The final one is underwriting of securities. In related to preparation of financial statements, we are going to deal how to prepare the financial statements of a company as per Schedule 3 Division 1. So what is Schedule 3? What is Dividend 1? All such stuff we are going to learn in that specific chapter. But here, what we are going to see, sir, we are going to see only one thing, that is preparation of financial statements. That is balance sheet and statement of P&L. How to prepare these two only we are going to see. Even though cash flow statement is also one of the financial statement, but how to prepare the cash flow statement we are going to see through the next chapter, which is a cash flow statement. And the entire cash flow statement we are going to deal based on AS3 cash flow statement. Is it okay, guys? Next, industry related specific entities like banking companies, insurance companies, electricity companies. How we are going to prepare the financial statements of such specific entities and various provisions related to the specific entities we are going to see in that specific module or the specific unit. And the last unit is purely dedicated to IndAS, Indian Accounting Standards. Even though you already seen some of the accounting standards in FA, which is paper 6, but the accounting standards you are going to learn in your paper 10 are quite different, because the accounting standards what you learn in paper 6 are existing accounting standards in India. But which are Indian accounting standards, Ind AS? Sir, what is the difference between accounting standards as well as Ind AS? How Ind AS emerged in India? What are the significant differences? Why, even though existing accounting standards are there, what is the significance of learning the Ind AS? What are the various Indian accounting standards we are going to learn? All such stuff we are going to see in the last chapter. So Ind AS 1 is related to presentation of financial statements. Ind AS 2 is related to valuation of inventory. Ind AS 10 is related to events after reporting period. Ind AS 19 is related to employee benefit expenses. Ind AS 33 is related to EPS, earnings price per share. Ind AS 38, I think so, which is 38, 37. Just let me cross check 1 second. Ind AS 37, 38. Here it is available. Just a moment. Let us give Ind AS here. Then all the relevant parts showing here. Just a moment, guys. Just I am cross-verifying whether it is Ind AS 38 or 37. But the title is what we are going to see in provisions, contingent liabilities, and contingent assets. Just I am confirming. Just a minute. Yeah, which is Ind AS 37, guys. I'm so sorry. Just you can change this. Ind AS 37, provisions, contingent liabilities, and contingent assets. No worries, guys. All such stuff in detail we are going to see. At this stage, if you see in the entire content, it will look like a big ocean. So slowly we are entering into the content and we are digging the entire well. Then you can understand what really occurring in the corporate accounting, what really there in the corporate accounting. Okay, so this is about a small intro with respect to your syllabus. Even I didn't explain the objectives of the chapters and what are really it contains. Just I gave the bird's eye view of the overall syllabus. Why I am not taking that much of pain to explaining each and every specific chapter at this stage. At the time of entering into each and every specific chapter, in detail we are going to discuss. And even though if I'm trying to explain things related to each and every specific chapter right now, you may not appreciate properly. Do you understand? So that's why while entering into the each and every specific chapter, in detail introduction will be given by me. Then only I am entering into the each and every specific content of that chapter. Okay, fine. Come down, guys. So this is all about your syllabus and the exam pattern and the materials, how you should need to follow. Also, I told you, just here I am mentioning one more time the materials. So totally 3 material resources you should need to follow. One is our main material. I can call it as always main material. So which consists of the concept as well as problems, but which does not contains the solution. So for that, we are releasing another material, which is solution material, which is also a printed book. Okay. And the same solutions as well as the concept, what we are going to deal in the classroom, which is available in the classroom notes. We can call it as classroom notes, which is handwritten notes. While during the classes, what we are recording, we are getting as a PDF. Okay. Next, sir, in the lectures, in which order we should need to watch, sir? Guys, all of you just believe me, the order in which the lectures are going to uploaded in the application, in the same order, please all of you watch. Don't go zigzag manner, don't go here and there, because all the chapters were strategically arranged. If you are able to grab the content in one chapter, it have automatic link up to the other chapter. So without seeing the chapter number 1, if you directly move on to chapter number 2, you may not appreciate the content in full-fledged manner. So that's why it's my sincere request, please all of you follow the same order in which I'm uploading the lectures. And one more thing, guys. Sir, the entire syllabus is divided into 5 different units, as I told, as per the same year resource. But the chapters which I arranged in our material is quite different. I mean, if you check the as per the CMA source, the syllabus as per CMA material or as per CMA source, CMA board material is divided into 5 different units. But if you check, we are totally having 20 chapters. Okay. So how these 20 chapters I arranged and why I divided each specific unit into number of chapters. Okay. There is so much of background story involved there. Okay. After that, I arranged all such chapters and I splitted all such different chapters. Please, all of you follow the same chapter names for your preparation, for your watching lectures as well. Hope you understand. For knowing the things, just I am explaining the 5 broad categories of your syllabus, but the entire lecture parts and the material contains total 20 chapters. Now, the first chapter is there, that is issue of shares and debentures is there now. I almost divided into multiple 7 units because every subchapter I divided as a separate chapter. That is accounting for issue and forfeiture of the shares, bonus and right shares, buyback of equity shares, redemption of preference shares, issue and redemption of debentures, ESOP, ESPP, employee stock option plan and employee stock purchase plan and sweat equity shares, and underwriting of securities. So the chapter number 1 itself, I'm going to divide into 7 different chapters. Next, preparation of financial statements. As it is, I made it as a second chapter. But if you observe, after completion of chapter number 1, before completion of all other sub-chapters, I directly entered into chapter number 2. Do you understand? Why, sir? That is the reason I told you, please all of you follow the order in which I placed. In the same order, you can also please follow, because there is an interconnection between preparation of financial statements and with all other sub-chapters. Without explaining the preparation of financial statements chapter, if I directly shift on to the other chapters, you may not appreciate in the proper manner. Okay, fine. Next, related to cash flow statement, the separate chapter given by me. Next, industry specific entities, banking company, insurance company, electricity company, each and every type of organization divided as a separate chapter. Next, related to Ind AS, introduction to Ind AS and division 2 of schedule 3. So I made it as a separate chapter. Conceptual framework based on Ind AS. It is a separate chapter. Then each and every specific Ind AS as a separate chapter. Ind AS 2, 10, 33, 37, 19, 1. So total again, these are 3 plus 3. Total 6 chapters. 6 different chapters. That is 6 Ind AS totally. Do you understand, guys? In the same manner, the order in which I placed, in the same manner, please all of you follow for your lectures watching order as well as for your preparation order. Is it okay, guys? Fine. Next, come back here. Sir, this is all about introduction to corporate accounting with respect to your syllabus, with respect to examination pattern, with respect to materials, with respect to way of watching the lectures and all other stuff. Now, let me entering into introduction to company form of organization. Introduction to company form of organization. I think you already have a separate paper for a Companies Act 2013. That is the law related to the company. But still, I presumed that you are not awareing any content related to the company. Afresh, I'm starting the company accounts from scratch onwards. That is from the meaning of the company and the characteristics of the company and different types of companies and remaining all other intro are related to accounts. I mean, I'm not going to dealing the provisions with respect to all other issues. Do you understand? So the basic issues here I'm going to explain, because to appreciate the company accounts or to understand the company accounts in better manner, first you should need to understand what really happening in the companies, or what is the meaning of company, what are different types of companies exist, what are the characteristics of the company, what are different books of accounts maintained by the company, what is the compliance system followed in case of a company, what is the meaning of annual report, what is the meaning of annual return, what is the meaning of financial statements, which formats they should need to follow at the time of preparation of financial statements, what is the applicable framework related to the company. Such all other issues you should need to know. Do you understand what I'm telling, guys? Sir, in the introduction of company, mm, mainly which issues you are going to deal, sir? Let me put one by one here quickly. Which issues we are going to deal? Number one, as I told you, I will start with meaning of the company. Meaning of company. Then characteristics. Characteristics of company. Next, different types of companies. Different types of companies. Then we seen, then we are going to see, or we will see framework, legal framework applicable to company. Okay. Then maintenance of books of accounts. Then what is the meaning of annual return? What is the meaning of financial statements? And all other issues. Guys, still we are not entering into the chapter number 1, which is accounting for issue and forfeiture of the shares. Here I am providing introduction to the company. Okay, what the company is all about, how the company form of organization exists in the Indian economy, or what are the different characteristics of a company, what are the different types of companies exist in India, legal framework, I mean, what are the different laws applicable to the company, or at the time of conducting the company form of organization, what are the different compliance we should need to comply. Compliance means what are the statutes, what are the provisions we should need to follow, and maintenance of books of accounts, how we should need to maintain the books of accounts, what are the various books of accounts followed by a company, what are the different registers for need to be followed by a company, where such all books of accounts should need to preserve. Is it in manual system, or is it they need to follow in the double entry bookkeeping system, or they might follow in digital mode, or they might follow in physical mode. Do you understand? Next, sir, after preparation of all such books of accounts and the financial statements, whether they should need to send such financial statements to any regulator, whether they should need to present such financial statements and books of accounts to any other parties. Do you understand? Then what is the meaning of annual return? So what different component consisting of comprising in the financial statements, how we should need to prepare the financial statements, what format we should need to adopt for preparation of such financial statements, is it accounting standards are applicable, or Ind AS are applicable, or is it accounting standards applicable to a company? Definitely. Such are various issues we are going to see through this introduction part. But I don't want to touch any other provisions of the Companies Act 2013, which are going to learn in your other paper, so called as company law. Do you understand? So the basic things which we require to understand the company accounts in better manner, here I am going to deal. Fine. Now tell me, guys, all of you, what exactly the meaning of company is all about. What the company means, or what is the definition of the company? What is the definition of the company? Sir, in Companies Act 2013, in Companies Act 2013, you know, for all the companies which were established in India, which act is going to applicable, sir, which is Companies Act 2013. So earlier there is an act called Companies Act 1956. The definition itself defined in the Companies Act 2013 itself. Company means an entity which is registered under Companies Act 2013 or other any previous laws. An entity which is registered under Companies Act 2013 or under any other previous laws, then such entity is technically known as a company. This is the definition of a company given in the Companies Act 2013. But if you see in this definition, you may not appreciate the real meaning of the company. Sir, meaning means by seeing the company, what we can understand, sir. Sir, if you want to appreciate the meaning of the company, I'll give another definition, or I can call it as simply meaning of a company, but which is not a definition as per Companies Act 2013. Company means which is a voluntary association of persons. Voluntary association of persons for conducting the business activities. For conducting business and sharing profits. Sir, voluntary association of persons for conducting business and sharing profits means certain group of persons come together and without having any hesitation or without having any obligation, they voluntarily associated with each other for conducting the business activities. And through such business operations, if they attain any profits, such profits just they are going to enjoy. Such type of voluntary association of persons is technically known as company. Now, come back to our main material, guys. Come here. If you check the meaning of the company, so first here I gave the definition of a company as per section 220 of the Companies Act 2013. Company means a company which is incorporated under Companies Act 2013 or under any previous company law. So the same thing here I wrote, an entity which is registered under Companies Act 2013 or other any previous laws, other any previous company laws. Laws means that is company laws. Do you understand? Just let me change the correct sentence, or under any previous company laws. Is it okay, guys? The same thing here I given. Now here he used the word incorporated. Sir, incorporated means a company will not exist on its own. For example, human beings are there. Human beings came through a production process. Yes. So there is a contribution from male and female, and ultimately the human being is going to produce. In case of plants, in case of biological assets, that is those assets which have the brain and such all other stuff, they are known as generally biological assets. They might be animals, they might be plants. Am I right? So they came through a certain process. Like that, how the company is coming to exist, sir? Company is coming to exist through incorporation. Sir, why you are dealing incorporation, or why you are emphasizing incorporation in the deep manner, sir? The reason is company will not come into existence on their own. I will tell you the background story, how it is going to occur. So before dealing the things related to definition and all other stuff. So incorporation, just I'm talking about incorporation. Incorporation of company. How it is going to occur? Let me explain practically, guys. So the persons who have the thought process to establish a company is technically known as promoters of the company. Promoters. For example, the Reliance Industries Limited was established by Ambani Group of family. So now who is the promoters of Reliance Industries Limited, sir? So Ambani Group, we can call it as, or Ambani family, we can call it as promoters of the Reliance Industries Limited. Do you understand? In the similar manner, Birla Group, so is owned by the Aditya Birla's family. So Birla Group promoters is the Aditya Birla family. Do you understand? So like that, the persons who have the thought process to establish a company, we can call it as promoters of the company. Then what promoters will do, you know? Promoters, first they will approach the financial knowledge people. So financial knowledge people means like our chartered accountant or cost accountants or company secretaries, they will approach. Just the promoters, they will approach either CA or CMA or CS. Now what our chartered accountants will do, you know, then the chartered accountants or the financial professionals, what they will ask, sir, what is your proposed name of company? Proposed name of company. Or what are the objectives of your company? Objectives means which business you are going to conduct, sir. Do you understand? What is your capital, sir? What is your capital in case of companies which is known as share capital? Sir, what is the primary address of your company, sir? What is the primary address of your company, which is known as registered office? Do you understand? All such issues were asked by our finance professional. Now, after deciding name of the company and objectives and the share capital and the registered office of the company, then our finance professional is going to apply for a company through MCA. So there is an organization called MCA, which is Ministry of Corporate Affairs. In fact, to call it as an organization, which is one of the ministry of the government of India. So government of India is having various ministries, you know, right? Finance ministry, okay, like that, economic ministry, then BC welfare ministry, tourism ministry, whatnot, everything. So like that, one of the ministry is MCA, which is Ministry of Corporate Affairs. Who is the head of Ministry of Corporate Affairs, sir? So there is a particular minister will be appointed to oversee the entire affairs of the corporates which were exist in India. So otherwise, finance minister is only going to see the Ministry of Corporate Affairs as well. That is depending upon the government policy, a minister will be appointed. Do you understand, all of you? Now, how this entire MCA is going to administer, sir? This MCA will have total 7 big zonal wings in the throughout entire India. That is for South Wing, North Wing, East Wing, West Wing, Northern Wing. Okay, like that they have different wings in the throughout India, and each and every specific state contains ROC, which is so called as Register of Companies. ROC is nothing but Register of Companies. Now, what our financial professionals will do, right? Our financial professionals is going to apply company name, and they are going to upload objective, share capital, and registered office address, and the promoters, sir, who are acting as a promoters and such all other stuff through the MCA portal through the ROC. Now, what they will do, these finance professionals will apply through specific forms through this ROC. Just a second, guys. I'll open here MCA portal. Just if you check, this is the MCA portal. So which is Ministry of Corporate Affairs. So MCA service, if you check, incorporation, one tab is there. How I can register an Indian company, complete procedure itself is given. There are some forms. If you check here, through such forms, I should need to upload in my login. Okay, I have a login ID actually. Here just I am not entering that. Just a moment. Yeah, if you check here, I have some login ID credentials. Okay, so through this, I'm able to log in. I'm able to upload all such reports on behalf of my clients. I'm incorporating such companies through the specific forms. Here, I don't want to reveal the forms and other stuff and the procedure. Now, after uploading such all things, then they will approve my forms and they will incorporate the company. Once the company is incorporated, the company is taken into the database of the entire company's list. Then they will release one number which is called SIN number. They will release SIN number, which is known as corporate index number. And they will approve company name as well. They will approve company name and they will release the SIN number. The date as on which the SIN number is released is technically known as incorporation date of such company. So that means in India or in anywhere, the company is not coming through naturally born process. The company is coming through artificial judiciary process. That's why the company is known as artificial person. So the company is going to be incorporated artificially. That's why company is known as artificial person. Artificial person. Concentrate all of you one by one. So next, how the company way of organizations going to conduct their operations. So company type of organizations are in generally call it as two-tiered structure organizations. Sir, what is the meaning of two-tiered structure organizations, sir? Two-tiered structure organization. Two-tiered structure organization means company contains two legs. So one leg is shareholder, or we can call it as investors. Investors. Or you can also call it as owners. Or you can also call it as shareholders. And the other leg we can call it as directors. Sir, what is the difference between shareholder and the director, sir? For example, I have a plenty of money, but I'm not having the capability of conducting the business activities because I'm not a professional. I don't know how to purchase. I don't know how to sell. I don't know the marketing activities. I don't know the production activities. But such all qualities are the characteristics contained by the other people. That's why I will hire such people. I'll hire the professionals. I'll hire the directors. Director means the persons who are directing the affairs of the company, the persons who are participating in the operations of the company for decision making, for controlling, for managing. Do you understand? But I have the plenty of funds. That's why I want to invest into the such business. But I am not conducting the business activities on behalf of me. Who is going to conduct? Directors. Guys, that is the major difference in case of sole proprietorship and partnership firm to the company form of organizations. In case of company form of organizations, the persons who conducting the business activities are quite different from persons who investing into the business activities. The persons who are going to invest into the business activities, we can call it as shareholders or the owners or the investors of the company. The persons who are going to conduct the operations, the persons who are going to participate in the decision making are technically known as directors, which is a two-tier structure. First of all, you should need to understand this part. Now, shareholders will invest in the form of share capital into the company. With that money, directors will conduct the business operations through various decision-making policies, and they are participating in the regular day-to-day business activities. As a result, shareholders will decide certain remuneration to the directors as well. Then the attained profits by the entity is ultimately shared by shareholders themselves. That is the major thing happened in case of the company form of organization. Is it okay, guys? All of you now concentrate. Sir, actually the business is conducted by the directors and the investment is made by the shareholders. That's why definitely shareholders are eagerly waiting to know the results of the company, because they are nowhere participating in the operations of the entity, right? And moreover, the financial statements, that is the performance, to know profit or loss, to know the financial position, which is the balance sheet. For knowing both the statements or to check the reliability on such financial statements, shareholders will definitely appoint one person, because the in the operations, shareholders nowhere involved. Now, whether the operations conducted by the directors and based on which ultimately financial statements are prepared, now whether such statements are reliable or not, to check that, shareholders will definitely appoint one person, which he is technically known as auditor. Now, consider all of you, at the end of the financial year, it is the responsibility of the directors to prepare the financial statements. Preparation of financial statements. That is whose responsibility, sir? Director's responsibility. This is the responsibility of the directors to prepare the financial statements. Now, these financial statements are ultimately audited. Are ultimately audited by whom, sir? Auditor. So this auditor, who will be appointed, sir? Shareholder. And moreover, one more thing, guys, as per the Companies Act 2013, as per the Companies Act 2013, it is mandatory to conduct audit. It is mandatory to conduct audit by each and every company. That's why the auditor who is appointed by the shareholders in case of a company is also known as statutory auditor. Statutory auditor. What is the meaning of statute? Statute means law. This auditor is going to be appointed by the shareholders through the provisions of the law. That's why the auditor is technically known as statutory auditors. So that means in case of company type of organizations, shareholders are there, directors are there, auditor is also available. Sir, it is whose responsibility to prepare the financial statements, sir? Directors. It is whose responsibility to conduct the business activities, sir? Directors. It is whose responsibility to make investment into the business, sir? Investors. Do you understand, all of you? Fine. Next, come back. Sir, after seeing this entire process, what you can able to understand, sir? I can able to understand simply, company type of organizations is having the following characteristics. Company type of organizations is having the following characteristics. I mean, what different types of characteristics contained by the company, sir? Sir, still the definition part, I'm not going into the deeper. Just to be seen, company is an artificial person which is registered under the Companies Act 2013 or under any other previous company laws, which is a voluntary association of persons. Here the voluntary association of persons means which is nothing but shareholders, which is nothing but shareholders. For conducting the business, who will conduct the business really? Who will conduct the business? Directors. Directors. And sharing the profits. So this is the another meaning of company to understand in the better manner. Now I'm going to explain certain characteristics of the company. Guys, I already told you here, I'm not going to explain the entire company law in the manner you learned in your company law paper. Just here I'm touching the basics in different manner. Okay, what are the different characteristics of a company? Now let me know, guys, all of you, is it company is a naturally born person or artificial person? So which is artificial person. Why? Which is an artificial person? Which was incorporated by the people, which was not naturally born. So which is an artificial person? Super. Next. Tell me guys, there is a difference between management as well as investors in the company form of organizations. Is it true or false? Yes. Shareholder is a different person who ultimately invest into the business. Sir, directors are the different person who ultimately conducting or who ultimately managing the affairs of the company. So that's why there is a diverse in relation to ownership. Ownership means investors. There is a diverse in related to ownership as well as management. So ownership is in the hands of shareholders. Management is in the hands of directors. So directors put together, we can call it as board of directors. The board in generally call it as board of directors. A group of people of directors put together, we can call it as a board of directors. Next, concentrate guys. Sir, one more important characteristics of the company is limited liability. Limited liability. Sir, why company form of organizations is popular, you know, even though sole proprietorship and partnership firm and other type of business organizations exist, but the large scale of operations are going to occur through only company form of organizations. The reason is, the main reason is due to this character, due to this characteristic, or due to this feature, limited liability. What is the meaning of limited liability, sir? You know, coming to the share capital of the company here, coming to share capital of the company, because the owners or the investors or the shareholders are ultimately invested in the form of share capital, right? The share capital is a big amount and each and every specific shareholder contributed a certain amount. For example, the overall share capital of the company is, let us assume 10 lakhs. Now we are having 1 lakh shareholders. Then each and every shareholder contributing how much? At the rate of 10 rupees per share. Now, if at any point of time, the company is not going into good direction and the liabilities of the company is more than the assets of the company, then we are telling that company became insolvent. Tell me guys, for any person, if the liabilities are more than their assets, then that particular person is known as insolvent. That particular person became insolvent. Now, in case of sole proprietorship or in case of partnership form of business, if the business liabilities are more than the business assets, then the liability holders have a right to ask money by selling the personal assets of the proprietor and the personal assets of the partners. But in case of the company form of organization, the liability of each and every shareholder is to that extent of the money contributed by such shareholder. Now each and every shareholder how much contributed? 10 rupees, right? Now the maximum liability of each and every shareholder is to the extent of 10 rupees only. Even though company became insolvent, then the liability holder means the other party, unable to ask any single rupee from the personal assets of the shareholder. That is the great future of company. That is another characteristics which is limited liability. Next one, separate legal entity. Separate legal entity. Sir, you know, the company is also managed by human beings only, which are nothing but directors. But still, the company have separate legal entity in the eyes of law. I mean, the company form of organization may not have the voting power. Voting power means in the constitution doesn't give any voting power to the company as like human beings. For example, in India, persons who crossed the 18 years age factor, then they might get the votes and they have a right to participate in the elections. Okay, through their they can utilize their voting power. But companies may not have that voting power. The separate legal entity means in the eyes of law, how human beings we treated, in the same way companies also we are going to treat. So that means human beings can buy properties on their own name. Yes, companies can also buy. Sir, human beings can file a suit against another person. Yes, companies also can file a suit against another person. That is the reason why each and every company having one SIN number, which is corporate index number. To identify that company, this SIN number is released by Ministry of Corporate Affairs. By using that SIN number and common seal, by using that SIN number and a common seal. Common seal means they are having their own signatory power. The signature is actually done by the director, but the company signature means which is common seal. Okay, it is like a thumb seal. Okay, the company name and all other registered office address will be there. How we are going to see in the normal seals, in the same way the common seal is also going to exist. So which represents the separate legal entity concept. I mean, company is altogether a different party from their shareholders as well as from their directors. Company is different, director is different. Company is different, shareholder is different, because company is having their own legal existence. You should not club company with shareholder. Don't think that company is same, shareholder is same. Company is same, director is same. No. Company is altogether different, shareholder is altogether different. Company is altogether different, director is altogether different. That is the future of separate legal entity concept. Do you understand, all of you? Next. Yeah, almost all the important characteristics of the company just now I told. Okay, come down guys, come to our material. Just I seen only one definition of a company, and the definition we already seen through our OneNote. A company is described as a voluntary association of persons who have come together for carrying on the business and sharing the profits. Actually, the voluntary association of persons by whom? By shareholders. But who will conduct the business activities, guys, on behalf of the shareholders? Board of directors is going to conduct the business activities, and who ultimately sharing the profits? Shareholders only. Next, a company is an artificial person. Just now I told which is an artificial person, which came through a separate incorporation process, having separate entity, so separate legal entity with a perpetual succession and common seal. I told you already common seal, but I don't describe what exactly the meaning of perpetual succession. So another more characteristics of a company is perpetual succession. Perpetual succession means, for example, if all the shareholders died in an accident, but still the company is in existence. For example, in a partnership, if all partners died, then the partnership firm comes to an end. In case of a sole proprietor, if the sole proprietor died, then sole proprietor business comes to an end. But in case of companies, it doesn't happen like that. Even though all the directors died, even though all the shareholders died, still the business is going to continue, because each and every shareholder contain the legal hair. Then at that point of time, legal hairs will occupy the position of the shareholder. If directors died, then shareholders will appoint the new persons as a director. That's why company form of business organization will have a perpetual succession. Unless otherwise shareholders decided to close the business organization of the company, in generally the company form of business organizations are going to continue forever. But if the shareholders decided, then they can able to close the company form of organization. That's why which another important feature of the company is perpetual succession. So all the different characteristics here list out. It is a distinct legal entity existing independent of its members. I already told you members is different, company is different. Liability of the member is limited, which is a limited liability to that extent of face value of the shares. So, sir, what is the meaning of face value of the share? What is the meaning of market value of the share? All such stuff we are going to learn in the current chapter only, which is issue of shares. But for the time being, to that extent of money initially agreed by the member or agreed by the shareholder, up to that extent only he is liable to pay to the company, which is nothing but limited liability. Perpetual succession, just now we discussed. Voluntary association of persons. Yes. So if anyone want to become a shareholder of the company, then he can become voluntarily. Nobody will be obligated to buy the shares of the company. The shares of the company are freely transferable. That means if I want to exit from the shareholder of the company, then I can able to exit at any point of time as well. But except in case of a private limited company. Sir, what is the meaning of private limited company? What is the meaning of public limited company? All different types of companies also we are going to see. If you allow some time period to me, then I'm going to explain each and everything. Okay. So just be cool. That means except in case of a private limited company, in case of all other types of companies, the shareholders can easily transfer their shares to another persons as well. A company being a legal person is capable of owing, enjoying, and disposing of the property in its own name. I already told you, due to separate legal entity concept or the artificial person concept, company can buy the properties on their own name, and a company may file a suit against the other entities or the other persons as well. Though company is an artificial person, yet it acts through the human beings who are called as directors of the company. There is a divorce between ownership and the management. Who are the owners of the company? Shareholders. Who are the management of the company? Board of directors. There is a divorce between, there is a divorce between ownership as well as management. That characteristic also I already explained in the OneNote. Guys, I hope you understand something related to the company form of organization. Yes, sir, company is an artificial person which came through the incorporation by making application through the MCA. So the register of companies, which is one of the wing of MCA, will process the such application and will release the SIN number. Then the date as on which such SIN number is released by the ROC, that date you can call it as a incorporation date of that company. Then ultimately who invested into that company form of organization is known as shareholders, who conduct the business activities by managing the things and who are participating in the daily operations of the entity is known as directors. The directors combinedly we can put together as a board, and each and every shareholder is having a limited liability, and the separate legal entity concept is applicable in case of a company. Then the company want, if they can file a suit on the other persons, company can buy properties on their own name, and even though all the shareholders and the directors died, still the company can able to continue their business activities due to perpetual session concept. Am I right? So with this, hope you understand really what happening inside in the company. So what are the different features of the company? Now, before moving to the other issues, out of which meaning of company we completed, characteristics of the company also we completed. Now, before moving with the other issues, first let me discuss the concept of different types of companies. Sir, what are the different types of companies exist in India, sir? Types of companies. Guys, the first class may be a little bit in more theoretical manner. I know if it is related to accounting, you are expecting something related to calculations and figures, all other stuff. Give some time to me. For each and everything we are going to see. Okay. So once you are able to understand the concept behind the companies, then you are enjoying all my further lectures, guys. Okay. So let us see different types of companies. So one is company limited by shares. Company limited by shares. Company limited by guarantee. Unlimited companies. Private companies. Public companies. 1% company. Small company. Government company. Something is coming like anything. Okay. Government company. Some more are there. That is subsidiary company or holding company. Let me see the subsidiary and holding and all other stuff at later stage. Okay. First, let me discuss all these different types of companies, guys. Okay. What is the meaning of company limited by shares? Most or all the companies, all the companies which are in exist in India are, I can call it as company limited by shares only. Company limited by shares means that company definitely is having certain share capital, and to that extent of face value contributed by the shareholder, to that extent of the face value is the maximum liability of that particular shareholder. That is nothing but company limited by shareholders. So those companies which is having the share capital, companies which is having the share capital is known as company limited by shares. So that means without having the share capital also company will exist, sir. Yes, such type of companies is known as company limited by guarantee. In case of company limited by guarantee, no share capital. Sir, if there is no capital, then how they conduct their business activities, sir? How they conduct their business activities? They are going to conduct their business activities through donations. They can able to continue their business activities through donations, through government grants. Do you understand? Due to charities. Charities are donations, one thing only. Okay. Charities, etc. I'll give some example for your better understanding. Sir, what are the company you can take? Reliance Industries Limited, okay, all the private limited companies, Adani group of companies, okay, Tata, Birla, whatnot, everything are company limited by shares only in generally. But coming to company limited by guarantee, most of the times the companies are known as Section 8 companies. Section 8 companies means non-profit oriented organizations. You know the non-profit oriented organizations like trusts, societies. What are the profits they attain through their operations? Again, they are going to invest in expansion of their business. Like that, certain research companies are there. Okay, what is the objective of that research company? They are made certain research in the pharmaceuticals, or they are making certain research related to the technological issues and such all other stuff. Am I right? Now, the objective is finding something, inventing something. So it will be ultimately helpful to the society. For example, during the COVID situation, what happened? Everyone is researching to for the purpose of invention of a vaccine for the COVID. Am I right? So now certain companies who actually involving in such particular type of business, they might register under the Section 8 companies. Now they are working on donations or the government grants or the charities provided by the public or charities provided by the corporates, etc., by the other corporates. Now that company, we can call it as company limited by guarantee. So that means for that company, shareholders will not exist. For that company, members will be exist. But a nominal amount will be contributed by the members. Very nominal amount will be contributed by the members as the promoters, and the entire operations are going to be conducted from donations what they are getting, or the government grants what they are getting, or the charities what they are getting. Do you understand? Let me give a practical case here. So here I open Dr. Reddy's Research Foundation. Most of the persons you might already listened Reddy's company, Reddy's Laboratories, which is a pharmaceutical company. So the pharmaceutical company established another organization, which is Dr. Reddy's Research Foundation. So this is SIN number, which is company number. Status is active. Incorporation date, if you check, which was incorporated in the year 1986. Company type, company limited by guarantee. So the registered office of the company means at the time of incorporation, which address was given. So which was in Amirpet, Hyderabad, Andhra Pradesh, India. So directors or the officers were given. Anji Reddy, he is actually the managing director of entire Reddy's group. Some other directors information also given. Do you understand? Such type of companies are company limited by guarantee. Unlimited companies. In case of unlimited companies, the liability of each and every shareholder is unlimited. Sir, such type of companies are not exist in India. Sir, one of the future of company itself, we clearly told that which is a limited liability. So unlimited companies are not exist in India. Not in India. Just for namesake, here I wrote. In case of unlimited company, the liability of each and every shareholder is unlimited, not to the extent of face value. Okay. Coming to the private companies. Sir, what is the meaning of private company? In case of the private companies, in case of the private companies, the minimum share capital should be 1 lakh. Minimum share capital should be 1 lakh. So that means, can I establish a company with 50,000 share capital? That is not possible. In case of private companies, minimum 1 lakh. Do you understand? In case of public companies, the minimum share capital is 5 lakh. Next, in case of the private companies, the shares are not offered to the general public. The shares are subscribed through the private placement. Private placement means from the known group of people, from the known friends. Do you understand? In case of a private companies, their shares are not offered to the general public. So the private companies, the shares are offered through, or shares subscribed through private placement. Private placement only. Here the shares are subscribed by the general public. So subscribed through public issue. Yes, they can able to issue. They can go for public issue. Do you understand, all of you? Next, in case of the private companies, the shares are, there is a restriction in transfer of shares. There is a restriction in transfer of shares. You know why? Sir, actually private companies are established by the group of people were privately known to each other. So at the time of transfer of shares, in the company's bylaws itself, they provided certain restrictions. Okay, the party should need to transfer to the one of the family member only, or they should need to hold for certain number of years. Like that, certain restrictions are there with respect to transfer of shares. Here, the shares are freely transferable. Freely transferable. So simply saying that the main difference between private company and public company is with respect to size, with respect to transfer of shares, with respect to pooling of investments. In case of pooling, the private companies, they can pool from private placement, means certain group of people of members only. But in case of the public companies, they might pool the funds from the public and large or public at large. Do you understand? And in case of the private companies, the maximum number of shareholders should be, maximum number should be 200. In case of the public company, unlimited shareholder. So that means in case of private company, maximum 200 shareholders will be there. But in case of public company, unlimited shareholders will be there. Do you understand? So that is the difference between a private company and a public limited company. Next, in case of a private company, minimum number should be required 2, except 1% company, minimum 2. But for in case of public company, minimum 7 members should be required. That is minimum and the maximum limits in case of private and public. Sir, coming to 1% company, 1% company is a type of company which was evolved through Companies Act 2013. Before Companies Act 2013, there is no place for 1% company. Sir, for which purpose 1% company type of organizations established, you know? In case of 1% company, there is only one shareholder. There is only one shareholder. For example, I have plenty of money. I don't want to diversify the ownership to the other persons. I want to establish a company on my own and don't want to share profits to any other party as well. Then the best suitable organization is 1% company. Then you may ask one question to me, sir, if you died, then the perpetual session will not be there, na? Then one of the characteristics of the company itself not satisfied in case of 1% company, na? No. At the time of incorporating 1% company itself, I clearly provided the legal heir in the incorporation forms itself. If I suddenly died, then my place will be automatically occupied by the legal heir. That's why the business is still going to be continued. So most of the times 1% company is suitable for the persons who want to invest their entire money at large and who don't want to diverse their profits to another party. Next, coming to the small companies. Sir, small companies means which are not public company, guys. Small company is not a public company. First of all, you should need to understand that, which is not a public company. And for all other companies, for whose share capital less than 4 CR or the turnover is less than 40 CR, we can call it as small companies. For example, a particular private limited company, their share capital is greater than 4 crore, then which is not a small company. Their turnover is greater than 40 crore, then which is not a small company. Sir, why a special type of category was established in the Companies Act 2013? The reason is small companies is having certain privileges. That means they are having certain exceptions in applicability of the certain provisions of Companies Act 2013. Just I'm giving certain things for your better understanding. Normally, each and every company should conduct 4 board meetings in an year. 4 board meeting means board of directors meetings. And there is a specific timeline is also available in between each and in between 2 consecutive board meetings. It should need to be occurred within the timelines prescribed in the act. I don't want to exactly tell such number of days because I also not read all such things. Long back I read in my CA final at that point of stage, and no need to aware. You might already learn such things in your company lab paper as well. That is 120 days, like that something number of days will be there. For example, 2 consecutive board meetings should not be occurred after 120 days. Let us assume this is the provision, but which have an exception for the small company. A small company can occur the board meeting after completion of 120 days as well. Do you understand? For example, all other companies should need to compile, should need to follow certain other provisions while at the time of preparation of financial statements. They should need to send all the financial statements within so and so deadline. Maybe the deadline may be extended for the small companies. Do you understand? So like that, certain privileges are there in the entire act. Here I'm not telling the exact privileges, but hope you understand my content, what I'm trying to explain. So small companies is having certain privileges while compared with the other companies. Okay, next, coming to the government company. Sir, what government company is all about, sir? Government company means share capital is there now here, share capital. Out of such share capital, the greater than 50%, greater than 50% is in the hands of either central government or state government or in combination. That means the company itself is incorporated by the central government or the state government, and out of which greater than 50% stake is in the hands of the central government or the state government. Sir, so many government companies are there. Mini Ratna, Navaratna. I'll show here just a second. Okay. Navaratna companies. So just if you check the Navaratna company list, just as, yeah. Here itself is given. If you check Shipping Corporation of India, Hindustan Aeronauticals, okay, Engineers India Limited, Bell, BHEL, Bharat Electronics Limited, okay, Oil India Limited. So like that, various entities are given. Not only Navaratna, let me open Mini Ratna. Mini Ratna. So if you check Mini Ratna, Airports Authorities of India, BDL, Bharat Dynamics Limited, which is there in Hyderabad only. BSNL, Bharat Sanchara Nigam Limited. Okay. Antrix Corporation. So Airports Authority of India. Like that, certain mini Ratna organizations are there. All these organizations, more than 50% stake either in the hands of central government or the state government. Okay. Hindustan Shipyard Limited, HPCL. Okay. Vizag Steel Plant. Do you understand? So all these are different government companies. Even Indian Railways is also a government company, guys. Indian Railways is not a government department. Indian Railways is a government company. Yes, which is a railway corporation which was established through a specific act under which more than 50% stake is in the hands of the central government. I think so the entire stake is in the hands of central government, guys. Not more than 50%, entire stake is in the hands of central government. That is all about the government company. So apart from that, I can also tell certain other companies, which is foreign company, holding company, subsidiary company. I'm not having the space earlier. That's why I didn't write above. Okay. Concentrate. Foreign company. What is the meaning of foreign company, sir? Foreign company is a company whose registered office was located in other than India. So their RO, their original registered office is there other than India. Sir, various foreign companies is having their place in India, guys. Just let me open here. Okay. So if you check here, IBM, so which was actually a US based company, their registered office is in US. They're also extended their operations to the India in the name of IBM India Private Limited. If you check now, they are having their operations in India with the name of IBM India Private Limited. But what is the original origin? They're in the US. Okay. Next, if you check here, Amazon, okay, which is also American Electronic and Cloud Computing Company. So which was launched as a Amazon India. So which is Amazon India. Next, Citibank, which is their place in the abroad. Now their place of operations also in the India. Coca-Cola India Private Limited, which is also an abroad company, which was registered previously in the abroad, now which was placed in the India with the name of Coca-Cola India Private Limited. Google India Private Limited. Most of the persons, you know, the Google, so which was based from the California actually. The Google India Private Limited was also established in India. Okay. HP, most of the times in laptops you may seen, that is Hewlett Packard India Sales Private Limited with the name of HP. They're also having their operations. Nestle. Okay. So all they're having their operations in India. Sir, to become an entity as a foreign company, first it would be registered in, it would have already registered in the foreign country, and they extended their operations in India by registering through ROC as per the Companies Act 2013. Then such companies we can call it as a foreign companies. First the registered office in other than in India. After that it should need to be again registered in within India. Okay. Next, sir, what is the meaning of holding and subsidiary company, and what is the relation in between holding and subsidiary company? Holding company is a company. Holding company is a company in which holding company is a company that holds greater than 50% share capital in the other company. Then the primary company is known as holding company, and the latter company is known as subsidiary company, which is holding greater than 50% voting power. In generally call it as voting power, or for your language, for your understanding, you can call it as greater than 50% stake in the share capital. Or they also have control on the composition of board of directors. Control on composition of board of directors. Then each and every entity is holding to the other and the subsidiary to the primary. Sir, what is this control on composition of board of directors and such all stuff I am unable to tell at this point of time, but you may already learn such stuff in your company law. But in detail, whenever time permits or whenever the chance come to me, I'm try to explain what the control on composition of board of directors as well. But in the general understanding, holding and subsidiary company means if one company hold more than 50% stake in the other company, then the primary company is known as holding company and the latter company is known as subsidiary company. This is the various types of companies forms exist in India. This is all about various types of company forms exist in India, guys. If you come to our material, so different types of companies: company limited by shares, company limited by guarantee, unlimited, private, public, one person, small company, government company, foreign company, holding company, subsidiary company, everything, whatnot, everything I explained, guys. Is it okay to all of you? Next. Guys, we are in the introduction of company, where we completed meaning of company, characteristics of the company, and different types of companies as well. Now, please all of you concentrate. This is the last 15 to 20 minutes or 15 to 30 minutes of this class, which is the core part of our corporate accounting as well, which is legal framework applicable to company. Concentrate. Legal framework. Legal framework applicable to company. Sir, what is the meaning of legal framework applicable to the company? You know, sir, how we should need to conduct the operations of the company, sir? I mean, is there any certain conditions, sir, within which I should need to operate the company? Yes. You know, there are various provisions were established by the government through Companies Act 2013. So within such provisions, only each and every company should conduct their business activities. If it violates the provisions of Companies Act 2013, then the company may pay certain penalties, or the government or the Ministry of Corporate Affairs or the ROC may levy certain fees. Okay, may they file a suit against the company, and the board of directors responsible for that, they may go to jail. Or if the violation is happened from the shareholders point of view, then they're also might responsible for the activities conducted by themselves. Do you understand? Like that, various provisions are available in the Companies Act 2013 with respect to operations of the company. Now here, legal framework applicable to the company, in which point of view I'm talking? In accounting point of view I'm talking, because we are dealing the corporate accounting, right? Sir, to provide the accounting treatment, which laws I should need to follow at the time of providing the accounting treatment of a company? At the time of providing accounting or bookkeeping, at the time of providing bookkeeping, including the preparation of financial statements, which laws I should need to follow, sir? Which laws I should need to follow? So legal framework applicable to the company means, right here, laws need to follow for maintenance of books of accounts. For maintenance of books of accounts, including preparation of financial statements. You know, the primary source, the primary law is, you know, Companies Act 2013. Companies Act 2013. So to administer the company law in better manner, certain rules are regularly initiated by the Ministry of Corporate Affairs, which is known as company law rules. Company law rules. Apart from act, apart from rules, one more we should need to follow, which are accounting standards and Ind AS. Totally 3 different frameworks we are going to follow at the time of maintaining the books of accounts with respect to a company. Now in Companies Act 2013, from section 129 to 137, various provisions were drafted by the MCA with respect to maintenance of books of accounts. How we should need to maintain the books of accounts, where such books of accounts should need to preserve. Do you understand? I mean, is it accounting standards applicability is mandatory? In which format we should need to prepare the financial statements? Do you understand? Like that, various issues were prescribed in the Companies Act 2013. Just I will open for your understanding what these sections are all about. Yeah, come here all of you. If you check accounts of the companies, here almost section 128 to 138 were given. So here I wrote 129 to 137 of the Companies Act 2013 dealing with books of accounts, that is accounts of the companies, that is various books of accounts to be kept by the company. What are the various books of account they should need to maintain? That is ledgers, various registers, what they are going to maintain, and at which place they are going to kept. At which place means at their registered office. What is the meaning of books of accounts? What is the meaning of books of papers? Like that, various information were given there. Next, section 129 related to financial statement, how they should need to prepare the financial statement, which format they should need to prescribe. Actually, they are going to prescribe the Schedule 3 of the Companies Act 2013. Why each and every company should need to follow the Schedule 3? Due to section 129. In section 129, it is clearly given that each and every company should prepare their financial statement based on the format which was prescribed in the Schedule 3. That's why we are following Schedule 3 format. Next, section 130 related to something reopening of accounts on court or tribunal's order. Section 131 voluntary revision of financial statements or the board's report. Section 132 constitution of National Financial Reporting Authority, NFRA. Sir, generally who actually issues the accounting standards, sir? Who actually issues the accounting standards means Accounting Standard Board of ICAI. But with related to the company, who actually recommends such accounting standards are means which is NFRA. Because each and every accounting standard issued by ICAI, is it applicable to the company, sir? No. If NFRA recommends, if the National Financial Reporting Authority approves such accounting standards, then it will notify through a specific official gazette. Then what are all the existing accounting standards which were placed in that official gazette are legally applicable to the companies. So this is 132 is related to that establishment of that authority. So central government to prescribe the accounting standards. NFRA is a body that is related to 132. Constitution of National Financial Reporting Authority is a body. Sir, before Constitution of National Financial Reporting Authority, there is a body called NACAS, National Advisory Committee on Accounting Standards, which was completely and outrightly replaced with NFRA right now. Who is having the ultimate authority to recommend the accounting standards to the central government, sir? And right now, NFRA. Okay. Next, central government to prescribe the accounting standards. Sir, why company should need to follow accounting standards, sir? Section 133. Do you understand? Next, section 134, financial statements and boards report, something he is given. 135 related to given corporate social responsibility. 136 right of member to ask copies of audited financial statements. 137 copy of financial statements to be filed with registrar. Guys, whether you are understanding these or not, it doesn't give any impact to us. Just why I'm reading all such things, various issues related to the accounts of a company are clearly prescribed in the Companies Act 2013 from section 129 to 137. Based on the provisions given in the Companies Act 2013 only, we should need to provide the accounting treatment. Do you understand? So that means to provide the accounting treatment with respect to a company related matters, you should not only aware the general accounting treatments. You should not only aware the general accounting policies. You should not only aware the general knowledge of providing the accounting treatments, but also you should need to aware the provisions applicability with respect to the company. Here, what my point is, here what I want to try to tell here is, for the preparation of financial statements or for the bookkeeping of a company, apart from knowing the general things related to the company, you should need to aware the provisions of the Companies Act 2013 as well. That is my point. So then related to company law rules. For example, company law rules 2014. Company accounts rules. Accounts rules were released in the year 2014, where various issues was prescribed. Various issues means how each and every company should need to submit their financial statements to the ROC. So that means each and every company, after preparation of their financial statement, it should need to send their financial statement to the register of companies. Yes, in which format they should need to send. Okay, various like that various rules were prescribed in the year 2014. Next, company dividend rules. Dividend rules 2014 were established. CSR rules, corporate social responsibility accounting related rules were established. Like that, related to the specific transactions of the accounting, certain rules were also established. Now, at the time of providing accounting treatment related to that specific transaction, we should need to follow that rule. Next, accounting standards and Ind AS. Just now we seen, as per section 133 of Companies Act 2013, central government will prescribe certain accounting standards. Now, all such accounting standards should need to follow by the company. Maybe for certain types of companies, existing accounting standards will be applicable. For certain types of other companies, Ind AS are going to applicable. Sir, which type of companies accounting standards applicable? Which type of companies Ind AS are applicable? That guidance were also clearly prescribed in the section 134 itself. That means legal framework applicable to company means what are all different constitutions, or what are all different laws, or what are all different rules and regulations we should need to watch at the time of providing the accounting treatment of a company is a matter of discussion we are going to make here. Now, let me check the clear-cut regulatory framework or legal framework of accounting in a company. Legal framework or regulatory framework of accounting in a company. So the primary part is Companies Act 2013. This is a primary source of law governing the operation, including the accounting in a company. Sir, how we should need to conduct the operations is ultimately decided by the Companies Act 2013. Sir, operations means, sir, can we appoint n number of board of directors? Can we pay how much or what is the maximum remuneration we should need to pay the directors? Okay, sir, can we appoint the shareholders? How we can take the decision when a particular circumstance occurred? Do you understand? All such type of operational issues are going to be resolved by the Companies Act 2013. Not only that, regarding the maintenance of books of accounts are also going to seen by the Companies Act 2013. Section 128 to 137 of this act mainly provides the provisions related to maintenance of accounts and preparation of financial statements, etc. In addition, the Schedule 3 of this act provides the format of the financial statement. Schedule 3, sir, what is the Schedule 3? What are the different formats are possible? All such issues also we are going to see in further. Next, the company rules. The company's accounts rules 2014 provides important rules regarding accounting. In addition, some other rules such as company's declaration and payment of dividend rules and the company's corporate social responsibility rules also provide important guidance on accounting for specific transaction. That is related to dividend rules are applicable. Related to corporate social responsibility, CSR rules are applicable. Sir, what is the meaning of corporate social responsibility and all other issues also you are going to learn in your law paper. So whenever such specific topic is coming, just you are telling that you are going to learn in the other in that particular paper. The company law is pretty much vast. I'm not here to explain each and every provision of the company law. I am here to explain the accounting treatment with respect to the company. But without knowing such provisions, we are unable to understand the accounting in detailed manner. That is the reason why I'm taking the help of such provisions whenever the necessary. But in detail knowledge, if you want to get, please all of you go to that paper and learn the things. If you want, I can able to explain each and everything, but that is not our cup of tea, and we may miss out some other important content. Hope you understand my point here. But in layman approach, if you want, I'll explain what exactly the meaning of corporate social responsibility. For certain companies whose turnover exceeds certain portion, then such companies should need to contribute certain percentage of their turnover or certain percentage of their profits to the society. Do you understand? Because whatever they are earning out of the resources of the society. Whatever you are getting from the society, again, you should need to contribute something in the form of certain charity activities. Such concept is technically known as corporate social responsibility. It is the responsibility of each and every corporate citizen, each and every corporate company to provide certain social welfare activities to the society. So that is the reason why ITC, you know the ITC, right? ITC, what it is doing, its major business is paper. Okay, it kill the plants and it is manufacturing the paper, right? So for doing this activity, again, what ITC is doing, so ITC is growing the large and vast forest resources. Yes, they are every time, every year, they are taking certain forest resources into their hands, and they are growing certain plants. They are taking the responsibility of grown up of such plants as well. So like that, different companies, according to their objectives, they are making certain contributions to the society. So now at that point of time, what accounting treatment I should need to provide, how much percentage they should need to contribute, such all rules and regulations are given in the corporate social responsibility rules. Next, coming to the accounting standards. These are common set of principles, standards, and procedures that define the basis of the financial accounting policies and practices. That means all the organizations should need to follow the common set of accounting treatments that is only possible through the introduction of accounting standards as per section 133 of Companies Act 2013. Just now we seen here section 133. I'm highlighting here section 133 of Companies Act 2013. In India, currently two different set of accounting standards are in force. One is accounting standards notified under Companies Rules 2021, and another one is Indian accounting standards notified under Companies Rules 2015. So accounting standards are there, Indian accounting standards are there. Two different set of standards are also exist. The same thing here it is given. Guys, before going further, please all of you concentrate for 10 minutes. I'll close this session. Please concentrate. What I'm trying to explain here, compliance system in case of a company, compliance system in case of company. This is the crucial part to understand the entire accounting as well. Concentrate. What is the meaning of compliance system, sir? Compliance system means what are the mandatory procedures should need to followed by the company with respect to the accounting and audit, all other stuff. Concentrate. I'm not discussing the compliance system related to other things. Here I'm only going to discuss compliance system with respect to our accounting part. Sir, once the company conduct their operations, so they conduct their business activities or they conduct certain operations, then at the end of the financial year, they are going to prepare the financial statements. They're going to prepare, that is preparation of financial statements is going to occur. Now here my question is, sir, is it possible to prepare the financial statements as on March 31st itself? Do you think that as on March 31st itself, financial statements are going to ready? No, that is not possible because no one can work out all the components of the financials. For example, closing stock is how much, sir? We know as of the midnight of the 31st March because business is continuous process. It is happening. Okay, do you understand? So that's why we can't tell like that. So knowing each and every component of the financial statement is difficult task. That's why in generally financial statements are make it ready at the mid of April or at the end of April like that. But even though those financial statements are prepared up to the date of 31st March only, but they are going to make it ready by April 15th or April 30th like that. That is not my question actually. My question is, it is whose responsibility to prepare such financial statements, sir? So the responsibility, I already told you, it is not the responsibility of the shareholders, it is the responsibility of board of directors. But board of directors will delegate that responsibility to finance department. Finance department. Who is the head of the finance department? CFO, Chief Finance Officer. In generally, a chartered accountant or a cost accountant or the company secretary, or who is having the good knowledge on the finance like MBA finance, okay, are in generally acting as CFOs of the company. So now board of directors delegate their responsibility to CFO. Now CFO, what he will do? Just a second, guys. There is some problem with OneNote, I think so. If you check here, Empty paper is coming. Just a moment. I will close my OneNote. Again, I will open. Yeah, now it is coming properly. Yeah. Now board of directors delegated that responsibility to the CFO. Then what CFO will do? CFO will have a team. There is an accounting team. So on daily basis transaction, they are entered into the systems, that is softwares. After making so many adjustment at the year end, they ultimately prepare the financial statements. Okay, you know the financial statements comprising the financial statements comprising the financial statements are comprising balance sheet, statement of P&L, cash flow statement, cash flow statement. Sir, all their annexures, that is notes to accounts, significant accounting policies, all are form part of financials only. Okay, that is what are the attachments we're attaching for balance sheet, statement of P&L, cash flow statements are also form part of financials. These are the major financials of the company. Okay, it is the responsibility of the board of directors to prepare the financial statements. They ultimately delegated that responsibility to the finance department. After making so many efforts by the CFO and their group of team, they are ultimately make it ready that financial statements. Now, on such financial statements, board of directors will make it sign. You know, the reason is I told you it is whose responsibility to prepare the financial statement, board of directors. How that responsibility we can provide to the board of directors? By making sign on such financial statements. That's why after completion of the preparation of financial statements, board of directors will conduct a board meeting, which is known as board meeting or directors meeting. They'll conduct a board meeting. In such board meeting, what they will do, you know, they will approve the financial statements. Approval of financial statements. Approval of financial statements means they'll also make it sign on such financial statements. And apart from approval of financial statements, in that board meeting, they are also release one report called as director's report. Sir, in director's report, what they are going to release, you know, what are the activities conducted by them in the last 12 months? What are the proposals they are going to made in the future? And what are the different responsibilities which is called as director's responsibility statement, DRS as well. In director's report, apart from the activities conducted by them, what are the various crucial decisions taken by them in the past? So what are our future proposals, and what are the various responsibilities? Sir, it is the responsibility of us to prepare the financial statements. While preparing the financial statements, we apply the generally accepted accounting principles like accounting standards. We complied the provisions of Companies Act 2013. Do you understand? We prepared the financial statements based on the format given in the Schedule 3. It is the responsibility of ourselves to protect the resources of the company. Like that, certain responsibilities also given under the director's responsibility statement. Now, the financial statements, they approved, and the director's report along with DRS also they are going to release. Now, the approved financial statements will ultimately go to auditor, that is the statutory auditor. Earlier we seen na, earlier we discussed something related to statutory auditor na. What statutory auditor will do? Ultimately, the prepared financial statements by board of directors is verified by the statutory auditor, whether they are prepared as per the regulators, whether the financial statements prepared by the board of directors are showing true and fair view or not. Is there are any internal frauds or errors occurred? Okay, accordingly, they will provide audit report. They will give opinion on the financials through a audit report. They will give opinion on the financial statements. Opinion on financial statements through the audit report. Now, financial statements, director's report, and the audit report combinedly put together we can call it as annual report. Annual report. In annual report, what we have? Financial statements, director's report, audit report. Can call it as annual report. This annual report will send it to the shareholders, because who is ultimately the owners of the company? Shareholders are the owners of the company. Shareholders should need to check the financial statement now. Shareholders should ultimately approve the financial statement now, because whether the board of directors or auditor, for whom actually they are working, for whose purpose they are working, they are ultimately exist for shareholders only, because shareholders are eagerly waiting to know how much profit or loss we attained, and out of such profit or loss, how much dividend may be declared, how much dividend we are going to get. Do you understand? At which financial position our company is exist right now. So like that, so many myths they might have. That's why this annual report is ultimately sent to the shareholders along with a notice of invitation to the general meeting, along with a notice of invitation to general meeting. I mean, this is sent to the shareholders, this annual report, along with notice to attend a general meeting should need to send to the shareholders. Then what shareholders will do? Shareholders will attend general meeting. Shareholders will attend to general meeting. Now, in general meeting, totally two different types of activities are going to occur. Now for the general meeting, auditor will come, board of directors will come, all the shareholders will also come. In the notice itself, it is clearly told the place and the time and such all other stuff. And in the annual report, in the notice itself also, they are clearly told which type of business they are going to discuss. That is ordinary business, the special business. What is the meaning of ordinary business, sir? Ordinary business means 4 activities in generally known as ordinary business. That is declaration of dividend, laying of books of accounts. That is simply we can call it as approval of books of accounts, appointment of board of directors, appointment of auditor. Now in the general meeting, ultimately what the shareholders will discuss, declaration of dividend. Out of the current year profits, how much declare we are going to declare. Sorry, out of the current year profits, how much dividend we are going to declare, which is declaration of dividend. Actually, who proposed the dividend, you know? Proposed dividend will be proposed by board of directors in the board meeting. Actually, here proposed dividend in generally proposed by board of directors, because sir, we attend so much profits. For example, if the entire profits, if you are going to distribute in the form of dividend to the shareholders, then the company may not have a resource for the further expansion. That's why who really know how much amount of dividend should need to given to the shareholder? Who ultimately knows, sir? That is board of directors only, because board of directors will know how much amount we can able to declare, how much amount we can able to retain for our future projects. Board of directors will know. That's why board of directors will propose. For example, 10% board of directors will propose, but board of directors doesn't have a right to declare. Who will declare? In the general meeting, shareholders is going to declare. Now, shareholders can declare the dividend at less than the percentage prescribed by the board, but shareholders cannot declare the dividend more than the percentage prescribed by the board of directors. Do you understand? That means the maximum cap was decided by the board of directors, and if the shareholders wants, they can declare the less than the percentage prescribed by the board, but not more than the percentage prescribed by the board. Do you understand? That is declaration of the dividend. Ultimately, dividend is going to be declared by the shareholders in the general meeting. And approval of books of accounts. Sir, ultimately those books of accounts belongs to whom? Company. Company means belongs to whom? Shareholders. Yes. They will watch the financial statement prepared by board of directors. They will also check opinion given by the auditor. If they have any questions, they might ask such questions to the board. They might ask such questions to the auditor. They will resolve all the myths what they have with respect to the financial statements. Then they are accepting such books of accounts. Next, sir, if they are not willing to continue certain directors for the next financial year, then they might remove such directors. They will appoint the new board of directors. Because if any certain director's performance is not at par with the standards, then they might go for the removal. Then they will appoint the new directors. There is appointment of the new board is in the hands of the shareholders. Appointment of the auditor. Yes, if they want to change the auditor also, then they can able to change. Okay, appointment of auditor is also going to happen. No, if they want to just continue, just they told that the same auditor is going to continue for the next financial year as well. So such all things is going to occur in the general meeting, which are so called as ordinary business activities. Certain special business activities is also going to occur. Special business activities means, for example, they want to expand their business into the other products, or if they want to expand their business into other places, or the way of conducting the business itself, they are going to change. Maybe a new software coming into the picture. Do you understand? So what are the new projects they are come across in the near future? So for them, they should need to take the approval of the shareholders, because for which huge budget should be required. What are all the significant items going to take place in the near future? They are put it under the special business. They are, after taking the approval from the shareholders only, they can able to start their business activities. Now, like this ordinary business and special business also, they can clearly intimate in the notice. If this is the special business, they can also attach explanatory notes. Explanatory notes means what is such special business, why we are doing such special business, what we are going to discuss in the general meeting. In detail discussion will be there in the explanatory notes. Now in the general meeting, how the shareholders is going to approve, shareholders is going to approve in two different manner. Shareholders is going to approve in two different manner. One second. A shareholder is going to approve in two different manner. One is through ordinary resolution, or through special resolution. Ordinary resolution means out of the existing shareholders, greater than 50% shareholders should need to approve. Then automatically that activity we can presume that approved by the shareholders. Special resolution means out of the existing shareholders, 3/4, greater than 3/4 of the shareholders should need to provide the favorable votes for the existing item. Then the special resolution is passed. Then we can presume that special resolution is passed. Sir, for which items ordinary resolution is required? For which items special resolution is required? That who will decide, sir? In general, act will decide. For certain items, special resolution is mandatory. For certain items, ordinary resolution is mandatory. And for such particular items, articles of association may also decide. So what these articles of association, sir? Okay, actually, I would discuss that matter at the time of discussing the characteristics of the company itself, but I forgot. Anyway, this is still I can able to discuss right now things related to MOA and AOA. Concentrate. Just I'm deviating from the compliance system. Sir, at the time of incorporation of a company itself, promoters should tell name of the company, objective, share capital, register office, and all other stuff, na? Sir, all these things in which document they are going to prescribe, sir, ante that which is known as MOA of the company. MOA means Memorandum of Association, which is known as Memorandum of Association. Memorandum of Association tells us reason for existence of the company. Reason for existence. Why this company exists? Why means for this objective. This objective means, sir, for digging the crude oil, or maybe for manufacturing the paper, or maybe for providing the service with respect to the financial services. The reason for existence clearly told by memo of association, and what is the name of the company, and where that company registered office is situated, what is the share capital of the company. Do you understand? All such stuff was clearly prescribed in the memo of association. Each and every company should need to file such memo of association to the ROC at the time of incorporation of a company. Unless otherwise that MOA is clearly filed by the company, ROC will not provide the incorporation certificate to the company. And not only this MOA, apart from this MOA, company should also need to prescribe AOA. What is this AOA, sir? AOA means Articles of Association. The name is known as Articles of Association. So in Articles of Association, what they are going to prescribe? Articles of Association provides internal rules and regulations. Internal rules and regulations for smooth conducting of their business activities. For example, board meeting should need to conduct at least 8 times in the overall year. Yes, that is their internal rule. As per Companies Act 2013, for example, it is 4 years. But as per their internal rule, they want to conduct for 8 years. Then they should need to conduct. Sir, the company have a right to buyback of equity shares after 3 years. It is their internal rule. And at the time of buyback of equity shares, special resolution should be mandatory. That is their internal rule. And to buy back their own equity shares, at least 3/4 of the equity shares should need to accept for that. At the time of issue of bonus shares, sir, ordinary resolution is enough. Yes, greater than 50% shareholder accepted, that is okay. Do you understand? So like that, all their internal rules and regulations, they are prescribed in the Articles of Association. Yes, company have a power to invest in the shares of the other company. Sir, company have a power to file a suit on the other persons. Do you understand? Like that, so many provisions they may insert according to the smooth running of the business. And if they want, they can alter the MOA and AOA also from time to time. Why I'm telling all these issues, guys? Sir, here, in case of the special business, they should need to provide explanatory notes, na? So in such special business, ordinary resolution is mandatory or special resolution is mandatory will be decided by the provisions in the Articles of Association. For certain activities, they may adopt the ordinary resolution. For certain activities approval, they may require the special resolution according to the specifications given in the Articles of Association. Just a second, guys. I will show you certain MOA and AOA as well for your better understanding. Yeah. So come here. This is a memorandum of association and articles of association of Reliance Industries Limited, RIL. Okay. So I don't want to show you each and every page. It is too difficult task. What I will show you, what are the contents are there in memorandum of association. Just now we seen memorandum of association contains name of the company. What is the name of the company? RIL, Reliance Industries Limited. Sir, where the registered office is located? In which place? Is it in Mumbai? Is it in Hyderabad? What is the full address? Main objects of the company, why this company was established, which activities is going to be conducted, the incidental objectives. Sir, to conduct the main objectives, certain incidental objectives should also be required. For example, I am in the process of manufacturing of the steel. To manufacture the steel, I should require certain raw material. From which place that raw material I got? For example, I'm importing that raw material. Yes, the importing of raw material is also one of the ancillary objective to conduct my main objectives. And other objectives are also there. What limited liability of the members? What is, to that extent, which part the members are liable? What is the share capital of the company? Do you understand? All such issues were clearly prescribed in the memorandum of association. Now in the Articles of Association, if you check, sir, share capital and variation of rights. What are the different types of share capitals they exist? Next, lien. Lien means like mortgage. Okay. How the calls on shares are made. At this stage, you may not appreciate each and everything. Just you can watch this. How we can make it transfer of shares. Okay. How the transmission of shares is going to occur. Next, alteration of share capital, joint holders, like various internal issues, rules and regulations given, proceedings at general meetings, how the general meeting should need to going to conduct. Okay. If you come down, adjournment of meeting, this all related to how the meeting should need to go in the smooth manner. What are the voting rights? Just now we discussed how the voting rights, that is special resolution or the ordinary resolution. Okay. related to board of directors, powers of the board, okay, responsibilities of the board, all such issues, whatnot, everything they covered. How they want to conduct their internal affairs of the business smoothly is clearly prescribed in the Articles of Association. Simply, Memo of Association tells the reason for existence, which contains name clause, registered office clause, capital clause. Okay, so Articles of Association contains the powers and duties of the board of directors and the roles and responsibilities of the board of directors and what are the various issues they can deal. Okay, is it ordinary resolution is mandatory or special resolution is mandatory, or how they are going to conduct all their business activities in the smooth manner? Such all issues they can simply prescribe in the Articles of Association. Now come back, guys. Still, actually, complaint system is not yet over. Now, in the general meeting, shareholders will discuss the ordinary business and special business activities. Both the things were prescribed in the annual report along with financial statements, director's report, auditor's report, and notice, and which contains ordinary business and special business activities. And they will approve such all things in the general meeting. After completion of the general meeting, consider it, guys. After completion of the general meeting, within 30 days, each and every company should file within 30 days, each and every company should file financial statements with registrar, that is known as ROC, Register of Companies. Sir, who is ROC? MCA is a ministry. Under that MCA, different regions heads are there, okay, who are known as directors actually, and for that each and every state specific ROC is there. For example, if it is Telangana ROC in Hyderabad, it is available. If it is AP ROC, it is there in the Vijayawada, okay, till now. If it is Tamil Nadu, then in Chennai ROC is available. Then all the matters related to the company filings and all other stuff is completely monitored by the ROC only. Now, after this, within 30 days of from the general meeting, each and every company should file the such audited and approved financial statements by the shareholders should need to send to the ROC. In which form, sir? In the form is AOC 4. The form is AOC 4. I will show you how the AOC form will be there. Just give a moment, just for your understanding. Yeah, come down, company forms download, come here, come to company forms download. Here just I'm typing AOC4, come down. If you check here, AOC4 form, please all of you watch the highlighted portion. Form for filing financial statements and other document with the registrar. That means after preparation of the financial statement, such financial statement should need to file in the AOC4 to the ROC within 30 days. Sir, why actually we should need to file all such form to ROC? Because who actually provided the incorporation certificate to you? ROC only. Then definitely ROC should need to monitor, na? Is it the financial statements are prepared on regular basis or not? Because a lot of public money was involved here. If any fraud or error internally occurred, then who will lose? Entire society is going to lose. That's why if you put such compliance system, then board of directors will act with responsibility. Auditor will act with responsibility. Then the company is going to conduct the general meeting on time. Then in the general meeting, each and everything they are going to discuss, and the accurate financial information will come out to the society. It ultimately filed with the registrar. If the registrar wants to ask any question, then the company should need to be responsible to resolve such queries as well. Sir, if the company is unable to file such financial statements within time, then ROC will also file certain penalty on the companies as well at the time of filing the returns. Do you understand? Sir, not only this, within 30 days, they should need to file the financial statement to the ROC. Apart from this, they should also need to file annual return. They should also need to file within 60 days. What they should need to file? Annual return in the form so called as MGT 7A or MGT 7. Sir, why two different forms are there? For private limited companies and small companies, they are going to follow MGT 7A. For all other companies, they follow the MGT 7. What is this annual return, sir? In annual return, financial statement information it doesn't contain, because financial statements we already filed. In annual return, what we will file in annual return, where the registered office situated. I mean, is there any change in the registered office? Who are your board of directors? Who is your auditor? Do you understand? How many board meetings conducted? How many board meetings conducted? How many general meetings conducted? Do you understand? What is the list of shareholders? What is the maximum remuneration payable to the directors? Maximum remuneration paid to directors. Maximum remuneration paid to directors. Such all information you can be prescribed in the form MGT 7 or 7A within 60 days of happening of the general meeting, which is known as annual report. Just a second. Anyway, I opened the MCA website. Here I'll put MGT 7 or 7A for form for filing annual return by a company. Form for filing annual return by OPCs and the small companies. Do you understand? MGT 7A and MGT 7, which are known as annual returns. Sir, after filing of these returns with the ROC, then the real compliance system of the company is over for the particular financial year. That means just your people are assuming that if once they prepare the financial statements and audited such financial statements by the auditor, then the responsibility of the company is over. No. First, they should need to pool the information from their operations. Then the bookkeeping system they should need to work out. Then they ultimately prepare the financial statements. Then it should need to be approved by the board of directors. Then the board of directors will propose the dividend according to the situation of the financials. Then they also release to directors report. In the directors responsibility statement also they prescribed. They'll make a sign on such financial statement, which ultimately go to the statutory auditor. Auditor is going to release audit report. In that audit report, he will clearly prescribe the opinion on the financials. Then the financial statements plus director's report plus audited report, they can prescribe in the annual report. Along with, they also attach as a notice, as an invitation to the general meeting. In that notice, they are adding the ordinary business activities and the special business activities, and for which is it ordinary resolution is mandatory, special resolution is mandatory, clearly prescribed in each and everything. Then as on the specific date given in the notice, general meeting is in generally conducted. Then in the general meeting, declaration of the dividend, approval of board of directors, approval of books of accounts, appointment of board of directors, appointment of auditor, everything is going to occur, and they're also going to discuss the special business based upon the information given in the explanatory notes. After completion of this general meeting, then within 30 days, the company should need to file financial statements in the prescribed form, so-called as AOC4, and within 60 days, they should need to file the annual return, which contains the registered office related details, board of directors details, auditors details, board meeting and the general meetings, list of shareholders, list of debenture holders, and the remuneration payable to the directors and such all other stuff. With this, the real compliance system of the company is going to end. Guys, still the intro part related to the company not yet over. I completed the intro part related to legal framework applicable to the company. Still, maintenance of books of accounts, annual return, and financial statements, I should need to cover to the content which was given in our material. I hope the maximum portion of intro for a company completed. I thought that you are following my session and you are enjoying my lecture. You are at par with me. In today's session, we've seen the entire syllabus of the corporate accounting, as well as the paper structure and the basic intro of the company. Still, we not yet enter issue and forfeiture of the shares topic. In the next lecture, once I able to complete the introduction part related to the companies, then we'll start with issue and forfeiture of the shares topic. Until bye, have a nice day, guys.